The type of growth capital that's invested in new technologies and the way that new investments are structured significantly impacts and shapes innovation. In well established industries like software and healthcare, growth capital investing norms have significant influence over which technologies are built, brought to market, and infused with capital to grow. A relatively new frontier, climate tech lacks the established norms common in other well established industries on how to successfully invest. The general lack of precedence for investing in a low carbon, clean energy, circular economy future seems to have created more space for a new breed of investors to chart their own path. In climate, both entrepreneurs and investors have opportunities to build and bring to market new technologies in ways that are more sustainable, more collaborative, and with great potential for higher capital efficiency. As part of PAC's On the Record, Off the Record series, we spoke with three climate tech investors who are reimagining the future of our planet, each with their own unique approach to growth capital.
What's interesting with climate is that the amount of capital needed is significantly more than any other business you probably have seen. The framework for investing has always been tech, right? So tech, 6, 7 figure checks might go to 7, 8 figure checks, might go to like 9 figure checks. But when you go look at climate, you just multiply everything by like another 1,000. So there's just a different range. Instead of millions, you're looking at billions and trillions. And those numbers might be shocking to people. My whole journey started from the pandemic. I read Bill Gates' book on climate. And when I put the book down, I took away two things. The two things were, I'm going to suffer, and the governments and the billionaires don't got this. And so I was like, all right, if I'm going to die, I want to at least try to help the situation. And that's where it all started.
So most investment is focused on monopolies, like how can I have a great business that is uniquely protected on all fronts and doesn't share with other companies, right? So their products make it cheaper. Think AWS and software, right? Like how can we build the AWS for ClimateTech? So we invest in this very low layer or high in the supply chain, depending on your orientation, type businesses such that the next generation of businesses will have to spend less to build their business, so on and so forth. We think if we do that well, we can actually create some of the dynamics that exist within Silicon Valley today. So it might look like investing in software in 10 years, which we're very hopeful occurs.
We provide structured capital solution emphasizing a credit type of investment into climate companies, usually Series B and beyond, where we believe there is a big financial capital gap. There are a lot of people who kind of write in venture chat, obviously a huge middle market for more like EBITDA positive businesses and more mature businesses, but there is a gap where companies really need to scale, and that's where we sit in. We'll get into the cash flow positive, and I will have my little exit here and do 2 times my money, and I will be happy. And I don't need to be sold on the J curve of the profit. But today we're doing only million, but tomorrow it will be big, and it will be all done with no cost. So I think credit is a growing asset class in climate for exactly those reasons. So yeah, that's why we're doing credit.